So joining us today is one of Toronto's top mortgage brokers, Rakhee. She has built her business and her brand tremendously over the past few years while making sure that her clients get the best possible mortgage solutions. She has helped all types of home buyers, first-time home buyers, upsizers, downsizers, investors, and luxury buyers, you name it. And today we're inviting her to our show, let's call it, to pick her head not only about mortgage solutions, things to avoid when getting a mortgage, but also to learn more about financial literacy for all the youngsters out there trying to save, get some guidance, and eventually get into home ownership. Let's dive right into it. Hey, Rakhee, thank you so much for joining us today.
Thank you very much for having me.
My pleasure. So yesterday I put a little poll on my Instagram story saying how we're doing this live today. And I asked our audience to send me all the questions they would have that I can run by you. And we got a flood of questions. A lot of them are the same, but if we talk about all those questions, we'll be here all day. So I've picked out maybe 4 to 6 common questions that I think are very, very good. I'm going to dive right into it, right? So obviously, you know this, we had an interest rate hike just a week and a half ago. And like every other interest rate hike that we've had a flood of also articles sharing the speculations right after, and they're all sharing the one same common message of a market crash. And what I wanted to ask you was, right now, are you seeing the same volume of mortgage applications, lesser volume of mortgage applications, or more volume after the interest rate hike compared to prior to the interest rate hike?
That is an excellent question. And the reason I say that is we've seen a shift. We are seeing market activity pick up again. I've had a couple of clients actually in multiple situations again, and we're getting questions like, can we go in firm? So I'm definitely seeing a shift in the market. I'm seeing additional momentum. I'm seeing buyers eager to get out there and start looking for a home. We've seen rental rates go up as well. So I feel that people are getting a little bit savvy and are running numbers. And I do see that there is momentum from buyers right now to engage and purchase a home. So definitely with this sort of rate announcement, I think we've kind of become a little bit accustomed now to understanding that we need to take control of our finances. And I think that's putting us in the driver's seat and we're making better informed decisions. And I do think that we're seeing momentum from buyers and a shift in the market.
It's interesting you say that as well, because my clients and I'm helping roughly about 4 or 5 home buyers right now, and we've put out about 20 offers, and every single one, Rakhee, every single one, we got outbid by a firm offer. And firm offers just came back like this, like it was a new concept to my clients. And now they're beginning to ask like what it is, can they do it, and all the risks that come with it, right? Now, when you're having conversation with these clients that are wanting to get an approval, are you able to kind of pinpoint what changed in their mindset? Because a couple of months ago, it was buyer beware, don't buy real estate, just it's the worst investment ever. And now they're eager to. So what changed? What's motivating them to not feel comfortable buying real estate?
I think we're identifying opportunity. I think if you firm down the numbers, I think if we look at the adjustment, let's call it out. We've seen a market adjustment and we've seen property values, I'd say balance out. I don't like to say that there was a market correction necessarily. I think things are a little bit more realistic in terms of where market values are sitting today. But that adjustment has allowed buyers to understand they need less to put down because at a lower purchase price, you need less cash on hand. So if they were striving to get into the market at a higher price point, that also required additional funds, an additional sort of down payment requirement. Many are able to now kind of take that step into home ownership based on what they have available to them today. So what we're seeing is an adjustment in market value, which provides opportunity because it requires less cash on hand. And what people are also understanding, even with the higher interest rates, that the monthly cost with a lower price point is exactly where they would have been 6 months or 8 months ago. So that's the reality of the situation. I think it's understanding facts. And I think that's what is motivating people. People are taking time to get educated.
That's actually a very good point. The average price of the average home across, let's say, the Durham region, Toronto for sure, hands down, but Durham region, we touched $1 million for even townhomes, anywhere from Pickering to Curtis, right? And automatically, when you're buying for $1 million plus, you're required to have 20%. But the moment you're a dollar less than million, you can go with minimum down payment, right? And that makes a massive, massive shift. And I've been trying to tell my clients this as well, that over the past 12 months, if a house was worth $1 million, it sold for 1.2 in multiple offers. Today it's selling for $1 million or maybe even less. So that extra over asking portion is just kind of waived. And now you do have the ability in most situations to get a home inspection done, to do a little bit more due diligence. You have time to think, Rakhee. Like before, we used to have to put an offer within an hour. It was accepted within an hour. Right now, we have negotiations going on for multiple days, like a regular, healthy real estate market. And it feels amazing, right?
Safe, and there's opportunity. So I'm going to reference an example as well. Clients had a property that they were interested in. It was listed at $1.05 million. We were able to gather the information needed to prepare to go in firm at 99999 based on a minimum down payment. So what does that look like? The clients needed to have $75,000 on hand versus that 20% that would have taken it to $200,000. Like, look at the difference. And guess what? We were able to mitigate, collect the client's information, ensure that we mitigated the appraisal. Clients went in firm, and they were able to enter the market and purchase that property at 99999. So again, opportunity in the market and aligning yourself with professionals that are going to support you in being able to execute on your goals.
I think it also takes the right guidance from the realtor and the mortgage broker to recognize that this property for $1.05 million could actually work for $999 in your situation, rather than thinking, oh, it's above my budget, I just won't go see it, right? I'm seeing a lot of that, and I'm trying to encourage everyone to be out there to put pen to paper on anything and everything, because until you put an offer there, you don't know if you're going to get a deal, right? So talking about pre-approvals and your mortgage right now, talk to me about how vital it is to get an appraisal done ASAP.
Oh, the appraisal is, I'd say in this market, is the priority. We need to make sure you're safe. A lender is going to lend on the appraised value. And just to kind of shed some light there, it's not that the value isn't there. It's understanding the parameters on which an appraisal is based. It's based on market data over the last 90 days. And reality is that we've seen a shift in market activity. And that can be because of interest rates. It can also be because the most recent lockdown was just March. We were enjoying our summer. We were blessed with beautiful weather, and people were taking time to enjoy time with family and friends. We saw an upswing in travel. People were busy doing other things. So it's important to note that there was a shift in market activity. And when an appraisal is completed, it's based on 90 days of data. So we just want to make sure that there is data to support your purchase price. And that's where we're taking that extra step to get that done immediately, get it out of the way, ensure that you're safe, because a lender will be basing their ability to lend on the actual appraised value of the property.
Just to give you guys a heads up, most lenders, brokers will actually get the appraisal done before closing date, which is way too late. And Rakhee's proactively understanding the shift in the market, and to better protect you, she's ordering the appraisal ASAP. And appraisals are hard to get a hold of. It's usually a 5 to 8 business days time. So if you're watching this video and you're getting pen to paper on a contract right now and you haven't gotten your appraisal, then you got to look into it. Either message myself, Rakhee, or just call your realtor and mortgage broker and help them understand that the appraisal has to be done ASAP. So Rakhee, I'm going to dive into our next question. And in every single market, every single year, we have first-time home buyers that want to get into home ownership. Now, usually in a balanced market, first-time home buyers is roughly about 30% of the market. Last year, unfortunately, it wasn't, but things have changed. So what type of options, tips, or solutions do first-time home buyers have available to them if at this time they don't have their full down payment?
So there are many options available. One is tapping into maybe a gift from a family member. That is an option that we can tap into. And it is something that we've seen an increase of overall with our first-time homebuyer transactions. parents, an immediate sibling is willing to or available to gift them the amount to kind of bridge that gap and allow them to enter the market today. So that's an option that we always review and pursue for first-time home buyers in terms of getting them into the market today. 2 is your RSPs. Many are unaware that they can actually look into their RSPs and what they have available to them and take those funds up to $35,000 per applicant to leverage towards your down payment. Or maybe you haven't been putting funds aside for your RSPs. Maybe we can start doing that today and get an RSP loan, for example, and help you secure a very healthy tax rebate the next time you file, but 2, also source the down payment that you need to get into the market. It's important to note, though, that those funds need to sit in that RSP vehicle for at least 3 months, and that is often termed as vesting before we can utilize those funds, but we can begin that process of planning today. And 3, that there's the ability to also borrow the down payment, and those are called, flex down mortgages. There are some sort of contingencies surrounding that, and your qualification must support it, but there are options available to help first-time home buyers take that leap and get into the market.
Got you. And these are all very hefty topics with different, criteria per topic. So we'll probably do a follow-up video later on if we have enough demand that wants to see on all these solutions and how they work. So we'll do a follow-up on that. Before we dive into our next question, Rakhee, if you're getting a gift from your relative, how long does that gift amount need to be in your physical account before closing date?
So each lender is going to have a different sort of requirement. Generally speaking, we will request that the funds be in the borrower's account at least 10 business days before the closing date.
Got it. All right. So let's dive into our next question, Rakhee. Individuals buy for many different reasons, especially the matrimonial home. Investors are also heavily investing in the real estate market. Why on your end are you finding that investors are wanting to invest in the real estate market, especially in the times where interest rates are going up and they're expected to go even higher?
So that's because we're seeing a surge in the rental market and the demand for rent. We've seen a surge where investors are smart enough to realize that they're cash flowing. They're having someone else pay that mortgage. 2, the interest component becomes a taxable write-off. So there is opportunity for investors right now in the market, and investors, especially seasoned investors that have currently invested in real estate, are also taking a long-term outlook with real estate. And I think that's important to note. Those that have been there, done it, as ourselves, will also attest to the fact that taking that long-term outlook, and in a thriving rental market, there's opportunity to enter the market, cash flow, have someone else take on your obligations of debt servicing that loan amount, and be able to realize on future appreciation, as well as using that higher interest rate as a tax write-off.
That's wild. I don't think the average consumer knows that the interest rate can be used as a tax write-off. And I'm finding on my end, a lot of individuals want to invest in duplexes, multifamily dwellings, where they can get multiple amounts of rent. And the reason for that is that those homes are now under $1 million. The purchase price has come down by 20 to 30%, but the rent has gone up by 20, 30%. So now they can actually cash flow. Absolutely.
And they can also, as long as they're occupying one of the units, still purchase that property with less than 20% down.
Gold. Guys, in case you missed that, if you're buying a multifamily dwelling and you intend to live in one of the units, you can buy for less than 20% down and then have somebody pay your mortgage. That is absolutely crazy. Yeah, astonishing. Okay, so you're a homeowner, right? And with the interest rate hike, Rakhee, you have hit your trigger rate, and the monthly payments are becoming hard to just kind of keep up with. What advice do you have for a homeowner in that position right now?
So this is a very real conversation for so many households. So I think as much as we've identified opportunity, everybody's set of circumstances is a little bit different. And it's important to note that these people and these consumers and homeowners have solutions available to them. One option is that we maybe look at refinancing the property and extending the amortization, getting our clients into a payment that is affordable and conducive of their lifestyle. Let's be honest. Cost of living right across the board has increased. And it's important that we're budgeting for life differently than we did prior. Grocery costs have doubled. Daycare costs are coming back into play as people are reverting to going back into the office. There's so many considerations here. So at times it does make sense to have a client potentially refinance to address unsecured debt. Maybe we eliminate debt. Maybe we get rid of that car payment monthly. Maybe we look at extending the amortization. There are solutions available to clients. Two, for clients that might be in a sort of a situation where for a temporary period of time, for example, let's say there's a maternity leave and there's 4 to 6 months remaining, and there's a period of time where there's a fluctuation in household income and clients need a short-term solution, then it does not hurt to pick up the phone and call your lender and see if there's the ability to come up with a solution. So there's options available as mortgage brokers, and I like to consider us financial coaches, especially in the current market. There are options and solutions available to you. A lot of it does require putting together a financial plan, a budget, and reviewing solutions.
Beautiful. And if any of the individuals watching this, I know my clients will be watching this, and a lot of my clients are in a very similar position right now because the things on their end have changed. They've been affected by COVID, whatever the case is, right? I'm not going to get into details, but it's a very real case. Can they reach out to you to schedule a consultation to assess their numbers?
Always. And those are the calls that I think I most enjoy. I think in the end of the day, we have to remember that we're all humans and we all have a story, and it's important to align yourself with people that are willing to listen and extend knowledge to kind of help you, through and navigate difficult and challenging times. We all go through them and there's solutions available, and we have access to those because this is something that we do on a day-to-day basis. So let us share that knowledge and help you find the solution that's going to help you support you and your family.
That's nice of you. Okay, Rakhee, I have 2 more questions, but I know we're on a time crunch. Can we knock out 2 more questions, or do we have to wrap it up?
No.
Okay, cool. So I'll ask the first one, and I know this is subjective because it's kind of case by case study, but on a very broad perspective, you're buying a home today, first time home buyer, upsizer. Would you recommend a fixed rate mortgage or a variable rate mortgage?
It depends. It depends, and I'll tell you why.
Sure.
One, I'm looking at the spread between a variable and a fixed to see, does it make sense for the client to opt into a fixed? We are seeing fixed rates right now quite competitive. We've actually seen a drop in the fixed rate offerings, which might be news to some, but rates can be quite competitive. If I'm putting a client in a fixed rate product, I'm ensuring that there is an exit strategy in play because a fixed rate usually has sizable penalties. So if my client's looking to upsize in a few years, or if this is a starter home, I'm going to be a little bit reluctant to put them in a fixed rate product without sort of some additional sort of considerations in the mortgage contract that are going to be supportive of some future goals. Two, on a variable side, there are lenders that offer a static payment. So if the client is just really concerned about having that consistency of payment, I might be able to achieve that. And we really don't know where rates are going to go in 2023. My personal prediction is eventually they will start to come down, and that might be a great time to take advantage of that sort of, lower rate environment to address debt. So clients that are taking on those sizable mortgages need to be aware of a strategy to address debt load, which I think is the missing conversation for so many. So again, it's going to be very specific to the client's specific set of circumstances, where their finances sit and what I'm most comfortable and how risk averse are they, and how much a buffer do we have to ensure that if there is future increases that they can accommodate those increases and changes from an affordability standpoint. So again, very specific to the client's specific set of circumstances.
Yeah, I'm going to just put it out there. Every home buyer is probably worried on what to do, and I'm going to encourage them to put faith in your hands, because that is how you correctly analyze it. Unfortunately, I don't have the ability to control where my clients get their finance from. And sometimes they get advice that I don't agree upon. And one of them is something that you just kind of shed on, that they're getting encouraged to put a 2-3 year fixed rate right now. Some people are getting 5-year fixed right now, but they don't know that there's a massive penalty if they want to sell before that period. And then I'm having to walk them through that, whereas it was a lender's job to kind of request and find out whether or not this is for them, for their goal, right? So that being said, what you're hearing from Rakhee right now is spot on, and I highly encourage you to just give her a shot and talk to her so she is genuine with her advice. And then lastly, Rakhee, for someone who wants to be mortgage free or have minimum mortgage before or after retirement, is there a very broad plan that you can just share with us today to make that possible?
So I think it's important to get a head start on your future retirement goals. I know I'm planning for that today. I have a very simple model for clients at the onset when a first-time home buyer, secures their mortgage with Mortgage Savvy. I'm very, I go out of our way to communicate that your owner-occupied home is your only tax-free asset. Only tax-free asset, and that you can actually look at leverage to purchase investments that it can actually help facilitate your goals of being mortgage free. So owner-occupied home, get into your forever home as quickly as you can. Then look at leveraging that towards your first investment, refinancing that to buy your secondary investment, refinancing your investments to pay off your owner-occupied home. A very simple triangle model that can help you prepare to being mortgage-free on retirement, but also having additional sources of income from rental income on your investments. And should life circumstances change, as they have for many, you have the ability then to liquidate and have cash on hand to support your retirement lifestyle. So I think it's important to kind of get a head start. I'm not an advocate of reverse mortgages. I think it's important with anything, we need to get planning. We can't be operating in crisis mode. It's never too early to get started. Start planning today for the future. And I think the last couple of years have taught us that life is unpredictable. So we need to kind of crunch, numbers and ensure that we're devising a plan for the future today.
Yeah, don't think of it as just buying a home and that's it. Think of it as using your first home to then become a landlord/investor. Everyone who has multiple properties right now, and when you see them, you're like, ooh, I want to be just like that. That's how they began. It was a natural course. They didn't have to come up with tons of funds from other people. They could do it all on their own. They just had to be prepped in advance on how to make it possible. And it's possible for you. It was possible for me. I'm actively investing and I never thought I would ever invest, but just understanding numbers made that possible for me, right? So if I can do it, you can definitely do it, right? So Rakhee, someone wants their pre-approval, someone wants to talk about their current finances. Can they reach out to you? Where can they find you? How can they reach out to you?
So they can either text, they can email, they can reach out to us on Instagram. We're quite responsive. Anybody that does reach out will get a response within 2 hours. I'm more than happy to make my information available, and we can share it with the audience.
Beautiful. I'll put all the contact links in the description of this video. If you guys want Rakhee to come back on this, let's call it show or interview to talk about any more of the topics that we spoke about today, and you want more details on it, do let me know so then I can bother her to come back on Zoom call again. And just a heads up, when you go to Rakhee's profile, you are going to be blown away by how clean it is. Like for any, I think, individual who has a social presence, she has probably the most cleanest profile. So definitely give her credit because I know that takes a lot of effort.
Well, I appreciate it. Thank you so much for that feedback. It is sincerely appreciated.
For sure. Rakhee, thank you so much. And we'll catch you in the next video.
Thank you for the opportunity. I appreciate it.
Bye for now.
Bye.